Good morning, everyone. It's Friday. Very excited today. For those who don't know me, my name is Helena. I'm the Executive Director with the Greater New York Chamber of Commerce. And what a great day. What a great webinar that we are hosting today. Anything that has to do with getting money into businesses' hands, or you're as an entrepreneur or a sole proprietor, getting that money is so important. Why is it important? Because it keeps the economy going. Not only does it keep the economy going, you will grow your business and you will employ people, which turns around and spends money in your community, which is really important. So I'm so excited to have this phenomenal panel with us today to provide you the information to access to capital. Right now, I can't say enough about Manly Lynn, the SBA, Small Business Administration. If it wasn't for our partnership with the SBA and Manly Lynn, we wouldn't be able to provide these webinars that we've been pretty much hosting every Friday to get information into the business's hands. I can't stress enough how fortunate I am in my position as the executive director to meet with people like Manly, that she offers this information. And I'm like, we have to get it to the businesses. And that's the relationship that we have. We're so proud of. And this is what we are able to do today. So I'm going to turn it over to Manly to introduce the panel. And Jimmy and Raphael and Caitlin and Sylvia, thank you so much for doing this. You'll see in the chat that everyone's going to be really excited and ask you some great questions. By the way, put your questions in the chat. We'll get to them afterwards, because the panel go over everything, because they might answer your questions. And then Manly and I will take it from there. So Manly, take it away. Thank you again for hosting this and putting this together, because this is phenomenal.
So Helena, thank you so much. I need to make a presentation first. 10 minutes.
Oh, okay. Hold on. Okay.
So good morning, everyone. I will talk about SBA's financing programs. So like 7A, 504. So later when you hear, when you listen to the lenders, you know what they are talking about. There are so many different financing programs available. Okay. So I share my PowerPoint, and all of you will get the information about all the today's lenders, their contact information and their programs. So just go to the financing program. If you go to sba.gov, you can see we have different, actually, no matter what stage of your business, we have information for you, okay? Even before you launch your business, when you are planning, launch, manage, and grow your business. So just want to show you really quickly about our so when you scroll down on the landing page, you see the left side, free business counseling. Very important. You have to get ready, before you talk to the lenders, actually. So our resource partner, they can help you, tell you actually maybe what kind of financing program best for you. And they will help you with your business plan, projections, and also prepare your loan package. And then go to SBA's guaranteed business loan. I will talk about that later. Disaster, I hope we don't need that, but when disaster happens, actually we help everyone. And the federal government contracting. 2025, actually, Helena and I, we really want to help business go to global market and government contracting. Two huge markets that a lot of small business didn't think about. So for our one-on-one counseling, you just go to the website, local assistance, enter your zip code. You can make appointment with the 4 organizations: SCORE, Small Business Development Center, Veterans Business Outreach Center, and Women Business Center. They provide free one-on-one counseling for you, okay, for SBA and for you. And other than that, if you are looking for the 504 loan, you can see the first one, Certified Developed Company. I will talk about the program later. So you can find those lenders. And then second one is if you are looking for government contract, go to talk to those procurement technical assistance center. Now they changed the name to Apex Accelerator and U.S. Export Assistance Center. So SBA with Department of Commerce and Exim Bank, we three agencies have stepped together at those export assistance centers. So please learn, and we have financial programs to support you. So today we are going to talk about the financing program. This is just tell you, about government contract. I have three webinars actually on that topics. So please come to learn. For disaster assistance, when disaster happen, we help everybody, even the homeowners, the renters, and nonprofit organization. So I know right now a lot of business actually they are repaying the COVID idle loan. If you have any issue or questions, problems, please contact the servicing centers directly. Okay, now all the cases actually managed by them. So SBS financing programs, I will go to those. The first things, okay, you go to lender match because you want to find the lenders, and we cannot just refer one lender to you. So we have this function. You go online and answer the question about the name of your business, your address, what's your industry, how long have you been in business, how much funding you need. That's a question. It's a number you have to come up, okay? And they want to make sure that you have business plan, projection, and you are generating revenue. And the last one, your estimated annual revenue. Later, you will hear, the lenders, they talk about what they are, what they are looking for. So you need to prepare the statement of purpose, okay? What's the fundings can help your business to solve a problem or go to the next level? And also, how much will you invest, okay? So loan program, you can see SBA have different kind of loan program. You can borrow from $500 to $5.5 million, okay, for almost for different purpose and different stage of your business. But SBA is not a lender. We guarantee the loan to the lenders. So we work with more than 4,000 lenders nationwide. So we guarantee the loan to them. So you don't have to contact SBA. You go to talk to the lenders or our resource partner. They can help you to prepare. So actually lenders, they handle all the loan transaction. If they feel they are risky that cannot make a loan to you with their conventional loan program, then they will submit your loan package to SBA to see if we can guarantee to them. So here, okay, have some steps for you. Check eligibility, talk to different lenders. Actually, today's purpose is to connect you to the lenders. It's not just answer your loan question, okay? A lot of people come here want to do not reveal your private or personal information here in the chat, okay? We will send you the contact information of all the lenders today, okay? So this is the beginning of you to build a good relationship with those lenders. So check the eligibility, find the right lenders, and gather all the documents, submit your application, and wait for approval. So, important SBA's loan requirement, the first one, credit history. Later, you will see actually lender tell you they don't just look at your credit score. They want to see your whole credit history, your business plan, your financial statement, and personal guarantee. Have a little bit different for each of the lenders and your experience in that industry. So there are three big categories. 7A loan, you can, this is the most popular general SBA's loan program. Can borrow up to $5 million. You can use that for almost everything, even refinance your current business debt. And this is eligibility, have to be in operating for profit in the US and meet SBA's size standard, okay, the definition of small business. and is not one of the ineligible business. I have next two slides will have the list. And the last one actually is you have to reasonable ability to repay the loan. So these two slides are ineligible business. We will send this to you. And then SBA loan, you can 7A loan can borrow up to $5 million. The interest rate is prime rate plus 3 to 6.5%. If you borrow less than $1 million, you don't have to pay the guarantee fee. But recently have some changes. Okay, I think they raise up the amount. So our newest program is a working capital pilot program. So can borrow up to $5 million. But this one is different because it's like a line of credit. So you don't have to pay the whole interest of the whole amount. You just pay whatever you used, those parts of interest. Under the 7A, we have small loan. You can borrow up to $500,000. You can negotiate the interest rate. And also, if you borrow less than $50,000, there is no collateral requirement. Have express loan. If you need an emergency need, actually turnaround time is only 48 hours. You can borrow up to $500,000. Under the cap line loan, actually we have working capital line, contract line, season line, and builder line. So for different purpose. The second one, this is a very specific programs for business to buy the building or land or new facility or machinery and do the improvement or moderation of your facility. So you can see the pie chart. You only pay 10% down. If new business have to go up 15%, then SBA, we authorize the CDC to lend you 40%, and we will find a lender to lend you 50%. So you'll borrow money from two lenders. So the micro loan is for startups because most of the lenders, they don't make loan to startups. So SBA, we work with nonprofit organizations. So provide this, you can borrow from $500 to $50,000. The interest rate is between 8 and 13%. So this is a list, okay, micro loan in New York area. So the next one is investors. If $50,000 is not enough for you to start a business, then you should consider this investor. Okay, so SBA actually we lend money. Actually, we match $2 to $1 to those investors. So here have the SBIC directory. You can find the investors. Surety bond is for construction company. Construction company, when they get government contract, usually they require to have bonding. So SBA, we have the surety bond program. There are 3 international trade law, okay, for different purpose. You can borrow up to $5 million. Now, actually, we broaden the definition of exporter, okay? Even you are not an exporter, if you provide services or sell your products to the exporter, you can use this one. And also, in New York City, well, because people like New York's design, we are creative actually. So like financial services, legal services and design architectures, even the fashion design and tourism, of course. And so think about this loan. You can talk to Abby. She's responsible for New York and New Jersey for the exporting international loan. SBA give funding to all the states to help the exporter. So please find out those grants. They have grants. And the last one, there are 2 grants because a lot of people business didn't know. So SBA have, we manage it with 11 government agency, Small Business Innovation Research Program, and Small Business Technology Transfer Program. You don't have to be a scientist or a researcher. A small business owner apply. for the grant, and then you can use that fund to hire a researcher or scientist. Okay, so I really encourage all the small businesses think about this. These are the 11 government agencies participate, actually including everything here. And the technology transfer programs, actually, the difference is you have to work with a nonprofit research institution to work together. So you can see each of the projects actually more than $1 million. Okay, so I have webinars on that. So I will conclude my presentation here. So now our show is on. Okay, today we have 5. I don't want to say emphasize beautiful, but actually beautiful and handsome and smart, and they are kind. I think the most things I work with them, they really want to help small business. They really from the bottom of their heart to want to help you. And today's purpose, I just want to connect you to the lenders. So talk to them, build up your good relationship with them. Okay, so this is the purpose. So first, please introduce yourself. Raphael, you go first.
I'm Raphael Roger, president of Business Initiative Corporation. We're located up in the Bronx.
Okay. Caitlin?
Hi, good morning. Caitlin DeJacob. I'm with Valley Bank. I'm a VP of SBA Lending, Business Development Officer for the SBA. And I cover all of New York, but we can lend nationally as well.
Jimmy?
Good morning, everybody. First of all, thank you, Manly and Helena, for putting this together. It's always good to see everybody. My name is Jimmy Vina. I work for a company called Pursuit. We've been around since 1955. Some of you might know us by our former name, the New York Business Development Corporation. So we are both a community development corporation and CDFI that's licensed to administer a number of SBA and non-SBA loan programs in New York, New Jersey, and Pennsylvania.
Sylvia?
Good morning, everyone. My name is Sylvia Mitchell. I'm a senior relationship manager at JP Morgan Chase, specializing in helping businesses. We are also a preferred SBA lender.
Thank you, Jose.
Hi, sorry, I was looking for the mute button. How's everyone doing? My name is Jose Mare from Ascendus. I'm the director of lending here. We cover the entire country, but my focus is New York and New Jersey. Good to be here.
Yeah. Okay, I want to just remind everyone, keep your question, okay? Can listen, I hope that you can listen to the lenders, okay? Now the next question, because a lot of businesses, they don't know, like they just start a business or they heard a rumor, say at least 2 years, they can talk to the lenders. So actually, what stage of the business can you make loans to? So it's like startups or 1 year, 2 years. Raphael?
We kind of go across the whole gamut. We work with another economic development corporation in the Bronx to do Bronx loans. We, as Business Initiative, do the whole state. But what we're looking at is, like you said, we don't want to hear from them 2 years from now. We want to be, as far as we're concerned, in from the beginning, so we can kind of guide them through the process with the help of the SBDCs and some of the other partners that we have around the state. So we will do startups. We will do, and it'll be a startup with somebody who has experience in that particular field. If you run a bookstore, we don't want to help you open a restaurant. You got to show us that you really have this. So, and it's not saying that we can't get you there within the first 2 years, but we want to know right off the bat that you have someone in your back that can help you. So we'll take everybody and anybody.
Okay, thank you. Kathleen?
Yeah, so we can work from the startup stage. I've done full startup loans here at Valley, off of projections, business plan, definitely having some skin in the game or the background experience, and some personal reserves definitely helps the bank feel more comfortable. with doing it for startups. And then, 1-2 years in business, golden expansion, there's a lot of opportunity there. So we'll really work through all phases, or even right now I'm working with a 100-year-old business. So, from 0 to 100, we'll be there to help you.
You, Jimmy?
Yep, Pursuit provides loans to both startups and existing businesses. It just really comes down to the use of proceeds, which would dictate which loan program.
Thank you. Sylvia?
With conventional lending, meaning without SBA guarantee, we can work with 1 year of business tax returns with the amount of borrowing up to 500,000. We can do startups with the SBA guarantee. And of course, we do conventional lending. Anything over 500,000, the typical requirement is we want to see the average cash flow for 3 years.
Thank you, Jose.
So at the moment, we only lend to businesses who have been owning the business and operating for 6 months or more, depending on the program. And depending on their background, credit, and everything, we go up to 100,000 at the moment.
Thank you. Next questions. About SBA's programs. Do you make 7A, 504 microloan or international trade loan, Rafael?
We do 7As just in the Bronx and 504 all throughout the state.
Thank you. Kathleen?
So I really am specialized in the 7A loan product. However, the bank also offers 504s. We've done an international trade loan. It's a newer program, but the bank, is interested there to help. And as far as microloans go, we don't really have a microloan program. However, we have a community banking program that goes a little bit more. It's not an SBA product, but off personal credit score, for loans under 100,000. So, that would potentially fit in the micro program.
Thank you, Jimmy.
Yep, so Pursuit provides the SBA 7A, 504, and microloan program. We do not do the international trade program.
Okay, Sylvia?
We do 7A, 504, no microloans and no international trade.
Jose?
We do have some SBA programs, but most of our programs at the moment are microloans, and we have some specialized programs depending on the region.
Okay, thank you. The next questions. Other than the SBA's different loans, guarantee loan, what other loan products do you have? Rafael?
So we do lending with one of our partners up in the Bronx and wherever we can hand off pretty much, because we're basically a 7A 504 shop. So if we can find it a home, we will find it a home. Our partner in the Bronx does Bronx Economic Development does anything from a $5,000 loan up to $250,000. And like I said, my job is to get you into the right hands. If it's not with us, it's with somebody else.
Thank you. Kathleen?
Yeah, so we're a full service commercial and consumer bank. So as far as loan products, there is a wide array of lending options at Valley. So I don't personally work on them. I'm just specialized on the SBA piece, but I have a whole team of relationship managers that I can always help make an introduction to. So from loans of all sizes and types, and everything is very much so relationship focused.
Thank you. Jimmy?
Yep, so Pursuit actually has about 15 different loan programs that are non-SBA related. They can range from online quick short-term capital up to $100,000 that can be dispersed in as little as a week, to us being the only CDFI in the country that has a true line of credit product that mirrors that of a conventional bank.
Thank you. Sylvia?
Yes, primary lending products at Chase involve Chase commercial real estate. We can finance up to 90%. If there's a shortfall of cash flow or collateral, we partner with SBA. We do Chase commercial lines of credit, which start at 500,000. They're 1 year, renewed every year, sometimes every 2 years, depending on our conversations with the client. And then we have small business lines of credit up to 500,000 with a term of 5 years and repayment of 5 years. And then we have term loans for anything that requires hard collateral.
Thank you, Jose.
So we have microloans products that go from 5,000 to 100,000. We also have a line of credit product that goes up to 50,000. And we also have a special program with restaurant businesses. That's a 0% loan. That's limited. So if anyone's interested, please let me know. But you have to have been in business for 3 years or more.
Thank you. My next question is, because a lot of business, they call me, they say, you know, I ran out of money, I need money now. Usually I have to tell them it's too late, okay? So they should, so my question is, when should borrowers contact you? Rafael?
I think I kind of made mention of it earlier, and I know everybody on this panel will tell you the same thing. We want to know before, I want to know before anything happens. It's why we kind of ask for, people think that we're being a pain in the butt, but it's why we ask for tax returns so we can kind of understand what the business is going through. Right now, we're working with a business that we gave a loan to that is running short on cash, and we're trying to figure out what it is. So we're asking for month-to-month statements just so we can kind of understand what their flow is and what we can do to help. So we want to be there with you through the whole thing, because one, we know you'll continue to expand, and eventually we want you to not need us. We want you to go to Valley and to JP Morgan Chase and to all the other partners and say, yeah, that guy helped me out. But so in the beginning, we really want to be with you.
Thank you. Kathleen?
I would say, you know, definitely in the early stages, even if it's pre-planning for the future, it's always better to connect, have that honest conversation with a lender, start building a relationship. And then that way you start building a plan together to help the business, you know, initial phases, and look at the long-term strategy as well. And it's not just a relationship with the lender, it's also with the bank, you know, and having the right banker that'll be there to guide you, you know, step by step. So it really is a true partnership. We always say it takes a village to get an SBA loan done. And, you know, we bring the village here at Valley. So always the sooner, the better. And definitely before you start construction, if there's any construction involved, don't come in the middle. That one's a tough one. But definitely the sooner, the better. And when there's a plan, you know, you have a plan, an idea, some information, you know, even if it's not the perfected plan yet, it's definitely a good time to start getting some input.
Thank you. Jimmy?
So I'm actually going to start with when you should not. So the answer to that is you should not come when you needed the capital yesterday. I can tell you that just about anybody on this panel will agree that it is not something that happens overnight. So earlier is always better. And regardless of whether or not you're actually accessing capital at that moment, it's always good to understand the resources and partners that are around you. So that's not just a lender like anyone that's on this panel. It's also reaching out to your accountant, other community partners, and having your lawyer ready to go. But again, earlier is always better.
Thank you. Sylvia?
Yes, so probably everybody on this panel will agree with me that the best time to borrow is when you don't need it. In other words, go see your banker before you start spending your money, renovating your facilities, ripping up the sinks and toilets, because if you do need to do a refinance and you get the appraisal, it will come significantly lower. If you spend your own money already, your income, your cash flow will be lower. The valuation of the asset will be lower. So you want to have a plan before you start spending your own money. Now, so then one aspect, right? When you don't come in when you think you've run out of cash flow. The other aspect is when you start your business, right? When should you need capital? Everybody can say, well, right away, but not everybody qualifies for it. Right, but a good start, and that's where the banker comes in handy, and that's something that at Chase we do very, very well. We offer variety of business credit cards to help you build business, to help you credit history, to help you build credit borrowing experience. And that's nice thing about our business cards is that they don't, while we use your personal credit, it doesn't show up as a trade line on your personal credit, is your business credit. The very first step is you want to have a credit experience. A business credit card is a fantastic way to, one, monetize your expenses, prolong when you owe on your bills, so you have more cash in your operating accounts. But then a year later, you're a candidate for a small line of credit, and then you have experience with that. Then you can borrow. You can borrow a few $1 million to buy a building, and all those records, your borrowing experience prepares you for really using lender bank's money or borrowing, which basically expands the uses of money and has tons of other advantages if you understand it. But you have to position yourself correctly from the start.
Thank you, Jose.
Absolutely. Everyone said it. Basically, get it, try to get it when you don't need it. And, you know, like the rich people do, they don't use their own money, but a lender sees that they have money here, they have assets and stuff. So they can, if anything happens, they have where to look for that money. And it shows that they're not desperate, right? Because remember, a lender wants to get paid back. And usually people come to us once they are desperate for money, and that desperation is seen on their credit because everything's maxed out. It's seen on their bank statements because they have, you know, maybe overdraft fees here and there, you know, negative balances come, you know, left and right, and not much going on. Maybe they come when the low season is like completely dry, and that's high risk, right? Your credit is not its best. Your your cash flow is not at its best. So it's going to be harder for you to get a loan. So you want to be strategic. You want to know your business. You want to know your industry. You want to think ahead of time. If you sell, you know, ACs and do AC repairs, you don't want to wait a couple of months after slow season when we ask for the last few bank statements. There's nothing there. It's not the best time. Do it when you are at your strongest. Now, at that point, you have to think, what am I going to do with this money? How can I use this money to make myself grow? Maybe, for example, that same example, how can I make it so that I could start getting into the, snow removal or something, or venture into something else because now I'm okay and I could ask for more money, or because you know slow season is coming up, so you could use something to get you by during those slow months.
Thank you so much. Okay, so a lot of people, they deny themselves because they think their credit score is not good, or they don't want to contribute the collateral. So actually, what are your minimum credit score and the collateral requirement, Rafael? You have to unmute yourself.
I knew I'd be the first one. Truly, because of the SBA guarantee, we try not. The only collateral we'll probably ask you for is to have a life insurance policy in place. And what that will do is, and unfortunately, I've seen it does happen. If something does go wrong with the loan, your family and the business isn't burdened. The loan is paid off, the business can continue. So that's something that we will. I know the SBA guarantee wants you to have a certain amount of life insurance, but we will probably ask you to do a little more. And truly for credit score, we've done loans for folks that are in the upper 500s, but it's also because they have the cash in the bank. They have they have everything we've spoken about already. So we just want to make sure that as we're going through the process, and if things get a little tough, that you can make it, and we'll sit with you during that time to help you improve your credit score and get you through those times.
Thank you, Kathleen.
Yeah, as far as credit score goes, it's not a hard number, like a cutoff. So similar to what Rafael was saying, we really look at the total profile, right? Like the total potential of the relationship, the loan, industry. So, and we'll really look at background, if there's explainable items, if you were sick or an, emergency. We understand so many things happen in life. As long as we could talk through them and have reasonable explanation, I've seen us overcome a lot of challenges there. And then as far as for collateral, we do look, we go by the SBA for 7A. the SOP. If there is available collateral to be pledged, you know, we will need to take it, right? So in a nice way with a smile. So anything that can be pledged is helpful there, especially if it's, you know, more working capital or funds where there's not a lot of collateral in the business. So, and life insurance we'll lean on. It definitely is helpful, you know, to have. But we talk through it all. And, you know, we find, I always say it's always a custom solution for everyone who's in front of me. It's not cookie cutter. No two businesses are the same, even if they seem the same, they're not. So definitely a lot of flexibility.
Thank you. Jimmy?
Sure. So I would also say that Pursuit doesn't really have a drop dead credit score number. If I wanted to put one on it, I would say somewhere between 640 and 680. However, if you have a 400 credit score, you have bigger problems than trying to get an SBA loan. So second part of your question in terms of collateral. So under the SBA 7A loan program, SBA requires any and all available collateral, which is exactly what it sounds like. So if you had a house free and clear, you'd have to pledge it. However, you cannot be declined due to a lack of collateral. On the flip side, under the 504 program, the building is the primary collateral. You don't make the payments, you lose the building. In other instances, depending on how many owners there are, and if there's management succession, there would also be a life insurance policy requirement. But again, that's case specific. But generally speaking, those are the two.
Thank you. Sylvia?
When it comes to borrowing, the credit score itself is most heavily weighted when you are getting a credit card, because it's essentially unsecured, no income verification, right? So that's where it has the most meaning. The bank will look at the underwriting, would look at the your trade lines, your repayment history. But as you changing the type of borrowing, so let's say you're borrowing, you're getting a line of credit or a term loan, we're looking at your cash flow, so your ability to repay your loan from business operations, plus collateral in case you would default on paying the loan from your operations. And so when you borrowing to get a line of credit, revolving line of credit, we're looking at short-term assets, collateral, and that's typically your accounts receivable. When you are borrowing on a term loan, something that will be repaid over time and amortized over time, then you're looking at hard assets such as building or equipment. And in any of those scenarios, if there is a shortfall either of cash flow or collateral, then we will look at adding the SBA enhancements, which every preferred lender will do. They will give you options. In fact, we're one of the banks that we provide you with a loan comparison. So you get what is it gonna look like if you're borrowing on a conventional terms, or what is it gonna look like fee structure and the repayment terms if you're borrowing with SBA enhancements.
Thank you. Jose?
So the very minimum credit score we have is 575. However, we do have a get ready program. That's when you work with a special someone like a credit specialist on staff. And you can get a $500 line of credit if your credit's lower than that, or you have a lot of past due, you know, in loans and stuff. And then if you show improvement in 3 months, then it goes up to 5,000. But beyond that, it's 575, the very minimum. That doesn't mean that if you have a 650 or 700, you know, you're guaranteed a loan. It's not just the credit score, but it's also the content. Sometimes someone who has maybe a 650 credit score, for example, might have more robust, more diversified credit, older credit. They've handled installment, revolving, and so that might say more than someone who has, you know, 2 credit cards, you know, store cards, the 750 credit score. So just keep that in mind as well. It's not just a score. As far as collateral, most of our loans are not collateralized, with the exception of putting a UCC lien on the loan, and that just means that, you know, we put a lien so that any other lender that's looking to maybe lend, they see that they have another loan and we have a lien there. So if, you know, God forbid you dissolve your business, technically we have the right to try to go after assets of maybe any unpaid loans, or, you know, something that you stop paying. But yeah, in terms of hard collateral, like a house, a vehicle, we don't really do that.
Thank you. So my next question, because we told the business actually, they have to show they have ability to repay the debt. So I know actually SBA, we value the cash flow heavily. So what's your cash flow statement that actually requirement, or what's a good cash flow statement? Raphael?
I was gonna make the a positive one, but that's it's too simple for what it is. It's we want you to be as close to one, because then we can kind of try to at that point make the argument as to why you need this piece of equipment, why if you go into this building you can then pay back. But once we get past that part and you're an operating business, like anyone else here, we want to see, we need you over one and a quarter is really where we really want you at so that everyone's comfortable. But it's I think we've all kind of said it that everyone has their own different way of trying to look at this. So there's no one fits in a box. We understand that we're going to, with some folks, get them to the next step, and that's why we're lending them the money so that the cash flow may be kind of tight, but we know the next step will be them expanding. The other one is maybe they're paying too much rent and buying their building will get you to the right place. So we understand where you are and what's going on, and I know everyone here will be their own version of that, but we're all here to work with you.
Thank you, Catherine.
Yeah, I would say, we start at a 1.2 for a year of debt service coverage we're looking for. That, usually gives the underwriting team a good feeling of repayment. However, when it comes, it's all customized. I think is what Raphael was building on, and we've all been building on, is it's always who's in front of you and how you can try to do the best to help them, or at least point them in the right direction, right? So I think that's like a starting line. However, if a business is expanding or going through some, exponential growth or changes are happening, and you can talk through it, that's sometimes where the projections come in, the business plan. It's really the full story. So there's definitely flexibility there. But that, I would say, is our benchmark, of a starting line on cash flow.
Thank you, Jimmy.
Yep. So I actually want to separate my answer between startups and existing businesses. So everyone here has heard this term debt service coverage ratio thrown around for the last couple of minutes. So in simple terms, that means for every dollar of debt that you have a dollar in free cash to pay it back or more if you're doing, depending on the ratio. So for startups, because there is no historical data to go with, SBA becomes reliant on projections. Now, anyone can put a set of numbers on a piece of paper. It's the story that you tell behind it. So picture it as somewhere in between build it and they will come and a math exercise. It's somewhere in the middle of those two things. Now, if a business is in operation already, obviously there is historical data to look at. However, we will look at whether or not that business is what I call falling into the business owner trap, which is trying to write off everything humanly possible and show no profit. So although that may be great in the short term, it becomes difficult to explain that to a lender when you're looking to borrow money to be able to expand in some way. So again, with the existing businesses, we're looking at the historical data as well as the projections too.
Thank you. Jose? I changed the order because
Oh, yeah, no worries. I was waiting for her to speak first. So I'll take it a step further from what Rafael mentioned, which is great. Positive, something positive, but I would also say some transparent, like an honest one, because you can't fake, that you're making more. Really, that'll be a little difficult. But certainly, a lot of business owners pretend to make less or spend a lot more. And it might be beneficial in the short term because you don't have to pay Uncle Sam as much, but it will hurt your growth. And so even if you're saying you're making $30,000 a month, we're gonna go by whatever we could actually prove. If we see 3,000 a month, then that's what we're gonna have to use. So you have to keep that in mind, which is why it's so important to keep business separate from personal. Pay yourself. Let's see where that's going. Don't just pay yourself, put it in your pocket. deposit into your bank account, and even if it's a Zelle, transfer, but something where we could see that you're actually benefiting from the business. You can't come to us and say you want $200,000 and you've been showing, 5 years of losses and hardly anything in the bank and expect us to take your word for it. That's not enough. So a transparent one. Now, when it comes to actual coverage, and you might hear like 1.5, 2.0, what does that mean? Essentially, it means, for example, if it's 2.0, that means that once, we do the analysis of everything that's coming in and then everything that's coming out, what's left over. So if it's 2-to-1, that means that if you're left over with 1,000, you can your monthly loan payment cannot exceed $500 because it has to be twice as much as whatever the proposed monthly payment is. In our case, the very lowest, depending on the program and the profile of the client, everything is 1.5. But again, it could shift. It could be 2.0. So that depends.
Thank you. Sylvia?
Yeah, so all of my colleagues commented on the ratios. At Chase, we're looking for average business ratio of being that coverage service ratio being 1.2. With the global ratio to be 1.25. If there's a shortfall of that, we're using SBA guarantee. But I also want to comment on something Manly mentioned, the quality of cash flow statements. And that is not fully appreciated, how that helps you get a borrowing from the bank, especially if your business becomes bigger and more serious. Generally, we do work with tax returns, but I cannot tell you how much value you have if you add at least company prepared financial statements. And as you get bigger, you want to have at least compiled financial statements, then reviewed and then audited. As your business grow, and for a lot of you it will, this is a cost worth having. I can't tell you how many times we have businesses that come for $2 million line of credit, and they hope to get it with just tax returns. Tax returns in the world of bankers, it is not the most reliable financial statement. It is really important for us to calculate your ability to repay. So the cash flow statements from accountant prepared financial statements.
Thank you. Okay, next question. What is the most common mistakes borrowers make? Rafael?
I'm sorry. What was the question
What
again?
is the most common mistakes that
Oh my
borrowers
gosh.
made?
To me, the biggest one is not knowing what you're using the money for. If you're gonna come to us and say, and this is anybody on this call, we all know you're not ready for a loan when someone tells us, how much do you have to lend me? It's just not how it works. So you've got to sit with your team, you sit with your accountant, and you figure out, what we're doing to expand this business and what we need the money for. If you come and you sit and you tell us this is what the plan is, a lot of times I know people think once they have their business for more than 4 or 5 years, I don't need a business plan. That is not the case. I think of it as, if you go every year to the doctor to get a physical, April 15th should be the physical for your business. That's the time where you sit down and you figure out what the plan is for the following year. So you've got to figure out what you're going to use the money for, how you're going to pay us back. And if you sit with any lender with those two things, it will expedite the conversation 100%.
Thank you. Kathleen?
I definitely agree with as far as the source and uses, and being able to really break it down. That's key, because it's not how much can you give me. You have to really understand the need and justify it. And then the other big one, I don't know, maybe it's just lately on my desk, but it's the personal financial statement. If I could give one tip, it is understand the personal financial statement. It's in your name. If you have a spouse, it's your money, your personal monies, retirement. Be honest and open on it, because if anything, it comes back to bite you in the middle somewhere. So, make sure it's properly dated, properly filled out, because the lender, we really look at that. That gives us a snapshot, of you personally, in addition to the business. And a lot of times business owners, they see themselves in the business as one. So we'll fill it out, with balances that are really business balances. So really understand the personal financial statement, and getting that filled out correctly. I mean, that saves so much time and really helps me to help you more. So that would be my
Thank
piece
you.
that I've seen.
Okay, thank you. Jimmy?
Well, first, it depends on how much time you have. So the first thing about starting off with saying something along the lines of how much can I borrow? That clearly states that you haven't done the research, you don't really know what you're doing, and it kind of gives a little bit of concern to others on the other side. Second part of that is being willing, ready, and able to be upfront about any blemishes or issues that may come up. I could probably speak for everybody on this panel where there's no scenario in which we won't find out. So what I mean by that is I've had borrowers that have went bankrupt, that have been formally incarcerated, and everything in between. So it's not what you did, it's what you did to rectify it. So being able to talk about that up front. And number three, understand the timeline that you're working on. So meaning if you're specifically, let's use buying a building as an example. If you're buying a building, don't sign the contract and wait 2 months to go find financing. You should be lining that up beforehand.
Thank you. Jose?
Yeah, great answers here. I would say too many business owners are working in their business and not on their business. And that's because they get lost in the day-to-day. They see that they're making money, but are you actually generating wealth? Is your business actually growing each year? Because, right, even though you maybe entered into the business world because you have a passion, but you also have to live off this. And I think your goal should also be to grow as a business owner. That also means financially. And the reason why so many business owners are not sure whether or not they're actually growing, sometimes we ask, well, did you make a profit last year? I'm not sure. You have to ask my accountant. Like everything is the accountant. Like that's a basic question. Did you make money? Did you benefit as an individual from your business or not last year? I mean, because again, you may have a passion, but you also have bills to pay, right? And so too much of that part of the business, maybe some people, you're a great hairstylist and that's why you did it. You want to do hair, so you ignore the numbers. But you have to, someone mentioned going to the doctor. You don't go to the doctor and not look at the results for yourself, right? You want to see how your vitamin levels are. If it's, your vitamin D levels low, your cholesterol's high, then you go to your doctor and ask, hey, what can I do to improve this, right? Otherwise, what's the point of even going? The same type of relationship should be with your accountant. Hey, these are my actual, and it has to be real, right? You don't go give someone else's blood to the doctor and ask for the results, acting like it's for you. You give the real numbers so that you could understand. And again, you don't have to be an accountant, just like you'd have to be a doctor to understand that. Just give me okay, where am I doing wrong? Where did I spend too much? Where can I save? What's my goal for next year? What do I have to do to improve? So that's the type of accountant you should be looking for, even if it means paying a little extra, but they should educate you so that you understand where you stand, how you did last year, where's your business health, just like your health with the doctor, where's your business health and what you can do to improve and optimize it.
Thank you. Sylvia?
Yes, I agree with everything that my colleagues already stated. So I add some other things that are also relevant to you guys as business owners. Some of the very common mistakes with that from the banking perspective business owners make is mixing their personal and business finances, trying to run a business sometimes out of their personal, sometimes out of their business, sometimes putting things on a personal card, sometimes on a business card. Everything is mixed up and not consistent. That's a big one. As soon as you can, get a business credit card to separate your business expenses from your personal. Secondly, not reviewing your bank statements regularly. Everybody makes mistakes, including banks. Other thing to keep in mind, as much security as banks and financial institutions can provide, fraud is not a question of if, but question of when, and what is your strategy for that, right? You might want to consider accounts that, one account pays your payroll, your mortgage, and then you have another account for vendors, because you give out your ACH information, your account information. There's many vendors that may have your account information, and the information can account information can be compromised and fraudulent ACH or wire or check can be put through those accounts. So protect, when you have essential payments, protect them by having them debited from different accounts. Other errors that business owners make is maxing out all of their liquidity, their cash, maxing out their cards, and then going for a lending conversation with the bank. We've discussed it earlier on. Think about borrowing before you actually need the money. And these are some of the biggest things that new to businesses make.
Thank you so much, all the vendors today. So I think everyone just right now understand, right? So please include the lenders as your management team. Okay, they want to help you. Okay, so Helena, we have a few minutes to ask the questions, or you can ask questions.
Okay, do any of you give transfer credit consolidation loans? I think you went over that. Anyone? No? Okay. Regarding the lending programs, does a U.S. LLC incorporated fully owned by a foreign entity stand a chance?
No.
As of
No.
now, no.
Okay. For the surety bond, can non-trade contractors of a construction project use that loan? That's a good question.
For Chase lending standards, contractors cannot be bonded.
Okay. Yes, everyone. If you send me an email, you'll get the copy of the presentation everyone's been asking. This is on Chamber TV. Okay, hold on. People are just asking, referring, we had, have any of the present lenders today had experience or was able to help get funding to a business that was a victim of predator lender through an MCA and that was placed on a UCC1 lien by this predator? How can you help the business get funding? Wow.
So, okay.
Go ahead, Jamie.
No, so at the end of the day, that's something that a lot of us do regularly.
Yeah.
So on deck is like the Wild West, and a lot of these online lenders are very loosely regulated. So that's something we do all the time. It's not uncommon.
Yeah, we
Yeah.
do
Yeah,
as
and
we do as well. I
just-
helped someone. It was crazy. It was even on a building. They took out one of those predatory loans, and it was snowballing at like I mean, it was like such a crazy rate. It was almost like 20%. I was like, why'd you sign this? And the person just didn't understand what they signed. But luckily we were able to refinance the debt and help get them out, of the building and change the terms. So always, those are definitely things we could always help with.
That is
Just
why we put these panel discussions on. You have one-on-one with this panel right here. And if you have any questions, go through the Greater New York Chamber and I can make that connection with the people here at the panel for that, for that general question that you don't get into that situation. One last, I know that you guys are timely. What is the, someone asked, they have like perfect credit. I have perfect credit 850. I have all my books, but they can't seem to get funding.
We need more to the picture, not
Yeah.
enough to give a
Something's
coherent
missing.
answer. I suggest the person schedules a FaceTime with a banker.
Yeah. I'm just trying to get to everyone. Good morning, broker.
And a
Looking for
good
funding.
lender too, if you've been declined or they can't help you, they should be able to tell you why. So I always tell people, ask why. Don't just take a no.
Yeah, and then also you can, go, if someone says no to you, there might be someone, as you can see from this panel, that might say yes to you. Are you a merchant cash advance?
No.
That's a,
None of us. No.
okay,
We
agree with that.
refinance them, but
Yeah,
you have
I'm just
to.
trying to go through. Are there any banking facilities or SBA partners that provide loans that don't require personal guarantees? I think you covered that, but
Yeah,
And-
we do, but we're talking about asset-based lending, and I do not think there's a single business owner on this webinar that makes over $50 million in revenues.
Perfect. Okay. I think that is it. Thank you everyone for your time. Raphael, Caitlin, Jimmy, Jose, Sylvia, and of course, Manly Lynn, who, puts this together with the Greater New York Chamber of Commerce. Again, if you have any questions, feel free to reach out to me or feel free to reach out to any of the lenders. This is being recorded. We'll get a copy of the presentation. If you email me, I'll get a copy of the presentation over to you. Quick question before I go with you guys. If they email me, I can because your emails are not on there. Do you want to place it in the chat or have them email me and I'll forward it to you, however you want it?
I'll put it in there.
Email them,
So
but I'll place
everyone,
them.
they're going to put their information in the chat. If you have any questions, you can reach out to them or myself and I'll forward it.
Helena, I will send you the PowerPoint. Actually, all the lenders submit to me. They have their own programs information.
Oh,
right.
there we go.
I just
And-
have one request of Jimmy and Jose. If we could do one-to-one, I mean, there are a lot of clients that would be a good introduction for you guys.
Absolutely.
Now, Manly and I, just one more minute. I am so glad you said that, Sylvia. So we have a lot of online and in-person networking events going on. And for those who are on here, if you are go to an event and you see, Manly and I talk about this all the time. If you see someone in your same lane, go up to them because that could be your new partner. MBWE certification. They always want government contracts for you to partner up. And that's exactly what Sylvia did. She is referring to her other co-bankers. And I so appreciate that, Sylvia. It's just a great lesson because a lot of businesses just feel that they are, you can't talk to your competitors. And you can.
No, we
because you might
can.
be getting clients.
So long there's a product or service that my financial institution doesn't offer. In fact, we do have a partnership with Pursuit. Some of the SBA loans that we do them with Pursuit. So no, we don't do microloans. We don't do international trade finance. And I get the questions about it all the time. So I would like to have a FaceTime with you guys and see how we can help each other.
Yeah.
There you go. Thank you so much for your time. Enjoy your Friday. This Tuesday, April 1st, April Fool's Day, we're doing online networking. So if you're interested, join us and just go to chamber.nyc. This will be recorded on Chamber TV. If you have any questions, feel free to reach out to me. Again, everyone, thank you so much for joining us today.
Thank you, everyone.
Great
See you
weekend,
next
everybody.
time.
For your weekend.
Bye, everyone.
Talk to you soon.